Hello, everybody. My name is Jason, the Wizard of Ops. Welcome to. Hey, everybody. This is Jason, the Wizard of Ops. Dark matter is sleeping or something. I don't know, but I am here to walk you through. I'm here to walk you through some Vanna stuff, and I'll talk a little bit about what he was going to talk about. He, Jill, I'm getting a lot of echo. Okay. Anyway, so he was supposed to be here talking about overnight futures trading. Uh, Futures overnight, they trade from 6 o'clock up until about 4 o'clock the next day. Hold on, I'm going to turn down the volume because I'm getting a lot of echo from. All right, so futures trading overnight, a lot of moves happen overnight. There have been quite a few studies that have shown that futures trading in the overnight accounts for more moves. I think it was like 60%, 70% of moves rather than the regular trading hours. We did a study over here recently, and over the past several months, the SPX during regular trading hours has returned nothing. All the moves have been overnight. So what is that? Like, what happens there? And so some questions that I get are, what are market makers doing in the overnight? Because obviously there's moves that are happening that hurts gamma, that hurts premiums. And so what's going on? Well, first thing to think about is, yes, a lot of volatility funds located in Israel, Greece, London, a lot in London, across really all of Europe, and even some in Asia, and they have their own book. So a lot of times, some of the moves happen overnight, but there's a lot less liquidity at that time. So you can see that there are going to be 20, 30-point moves. I believe today we were looking at a negative 30-point move, I think, in the overnight. I don't know what it is now. I'm not paying attention. But so overnight trading is a thing, and I think it's important to do. I don't do it myself. Normally, dark matter would have been here to help you, but help talk about it. Maybe we'll talk about it next week. So, but overnight trading is a thing, and I know that there's a lot of people in our Discord that make a lot of money overnight trading. I like to sleep, but that's just me. So apparently, dark matter too. Jay. So here we go. First of all, let's talk about. So what I'm going to do then, I'm going to pivot a little bit. I'm just going to talk about the current market dealer book because it's getting very iffy. On Friday, my morning tweet was all about what will happen on NFP if it's very successful, neutral, or very, bearish. And it was very clear that there were more jobs created than anticipated, give or take, and the unemployment number was lower than anticipated. They were expecting 4.2% unemployment, and it came in at 4.1, or out to decimal places, it even seemed less than that. So where did all these jobs come from? And if you go on Twitter and even go on financial news, the NFP report is almost kind of like one of those Rorschach tests where they have those big ink blots and people see whatever they want to see. This is because ultimately, that report is not very reliable. The methodologies for seasonal adjustment or anything like that can be, I don't want to say manipulated, but they are skewed in such a way that can little things, it's just kind of transitions in American job dynamics. For instance, more people are working from home than they were pre-COVID. And if you're working from home and your home is in Wyoming, there's going to be a larger weight to your job than there would be if you were in New York City, because in New York City, people get hired and fired all the time. So there's a lot of geographic weight put on there. And so I think since COVID, I think there have been a lot of that. And I think that's why the big revisions to the reports have been down constantly, because they get more information, particularly about real jobs being created as opposed to seasonal adjusted jobs. Another thing, too, is that there are um, there's a lot of give in that number as far as, I guess you could say, subjective reason. There's a lot of subjectivity to that number before it is released. So, I mean, I used to work at the Census Bureau making numbers like that, so I kind of have a lot of insight into what goes on there. And there's also a lot of sampling issues too. When employers aren't doing well, they tend not to answer. They tend not to answer that survey that they get from the Census Bureau about their employment. So, like I said, it is a Rorschach test. To me, I don't value it very much. I do value that 4.2 to 4.1% unemployment, primarily because that's coming from households, and households tend to think that they're going to get something if they say they're unemployed. So I think that, and the response rate is higher on the household survey, a lot of times. And generally, as far as how many surveys get sent out, the percentage of returns on the household survey are a lot better. Regardless, the market took it as very positive. And even though, we're in this low Vanna environment, which you can see on the screen, right now, aggregate Vanna has gone down considerably. You see right here, this was last week. And on Friday, we're looking at, I have to sit here and pinpoint on this thing in order to hit that 1.7 billion of Vanna. That's it. And that's not good. That is a sign that this typically, it kind of foretells, leads a market downturn. It did over here. It has since 2017 when we had data. So it's a very iffy situation as far as aggregate Vanna goes. This number right here, Vanna inertia, I was talking about it on Friday, that if the market considered the employment number bearish, it would go down double than what it would have gone up if the market considered it bullish. Market considered the unemployment number bullish, so we went up, but only about 50 points or so. Believe me, if it was unemployment was at 4.3, 4.4%, and jobs created were single digits, then we would be down 100 points rather than up 50. Right now, though, Vanna inertia is very, very low. And I think the pre-market, again, that European dealer hedging, that pre-market is taking that into account. It's declining. That inertia is coming into play because of these steep hills right here, 5,800 in particular. If we pass that 5,800, aggregate Vanna goes negative. That's pretty scary. When it goes negative, 2022 was the last time that it went negative. It was negative all year long. What happened? The market declined all year long. So this is not going to be like one of those 2022 situations. This is a negative that if we dropped, then aggregate Vanna would go back to positive, theoretically. But it's kind of a sketchy situation. We can see over here a lot of these negatives right here. These positives are indicating that customers are selling puts. And yes, implied volatility is a little high-ish, but it is not saying that we should start selling puts. All this Vanna, the skew that is on this downside, is very underpriced. Puts are cheap, and calls are also they're overpriced. I mean, it's good to sell calls at this point as far as market pricing goes, because right now market pricing is pricing in from realized volatility and history of daily returns. So the history of daily returns has been very positive. So they've been overpricing positive calls, and also interest is in there too. Row is in there too. So customers see this. They've been selling a lot of calls. The market has been going up, but now we are at a point where aggregate Vanna has reached zero. That is usually the sign of a swing top, a couple weeks here and there. So that's kind of the Vanna outlook for maybe like the next week or so. I would be, take their if they want to overprice calls, take it. Um, honestly, the past drops of last week have been over VIX, so you're not. It's been kind of tempering any kind of major downturn. We could still go up to like that 5,800, 5,825 area, like right around here. But overall, I think that the all this positive Vanna that turns negative upon price crossing it, will turn aggregate Vanna negative, and that's a scary situation. So that's kind of the Vanna outlook. It's what I normally put on what I put on my morning tweet. So yeah, I think that's what we got. We could look over here right now on the Vanna heat map. I mean, I don't emphasize the Vanna heat map before market trading hours because market hasn't opened. There is no realized volatility change yet. But this is something that I take a look at to see what tenors have the strongest option pricing change. And you could probably pick up a expensive or a cheap option doing that. So that's what we have right now as far as Vanna goes. Intraday, I'm going to just kind of show you the kind of dashboard I have for intraday trading. This is the zero DTE charm, strictly just today's charm. We focus on charm. Again, I know a lot of you have watched these videos and kind of know this, but I'll say it again. We use charm to determine what the dealer hedging will be on a zero DTE basis because when the trading is over, 4 o'clock, when these options are not exercised, when they settle, then that's that the time between now and expiration is very, very slim. So charm increases, Vanna declines, charm increases pretty much to limit infinity. It goes about as close to super large numbers infinity as it possibly can until expiration. So from that, here we're looking at SPX. This is the pre-market. Don't count the pre-market very strongly. It just kind of shows you how people position for today, like on Friday, Thursday, Friday. A lot of clients, a lot of institutions do calendars on Fridays. I think that's what we're seeing here. Over here, you see a lot of like negative call charm, which is dealers are long calls. And you see a lot of positive charm down here for puts, which is dealers are long puts. So they're looking kind of like almost like a straddle right now in the zero DTE, but this gets overwhelmed within the first half hour or so. So if you want to see it evolve and you want to see kind of how dealers are going to hedge, zero DTE dealers are going to hedge during the day, you kind of have to come into Volland, come into the Discord, get the updates, learn how to read it, and you could do it. You kind of have to do it yourself a little bit. This right here, though, is what I wanted to focus on for now. This is the dealer adjusted spreads, delta adjusted dealer spread. What this represents is normalize every single trade through theoretical values, and the distance from that theoretical value to the execution point is the edge that the dealers are capturing. Okay. So what delta adjusted dealer spread is talking about is what is the, how sure are the dealers that these options are going to finish in the money? A lot of times dealers can sense or see even on the order flow what the what the outcomes are going to be over the next few days or over the next hours of market position, of market moves. And they see that because they see the hedging, they see how people are buying puts or selling calls or buying calls and selling puts. They see how the customers are acting. So, and they're not stupid. They have economic calendars. They know what events are coming and they know what to price up. So over here, when this spreads out wide, that's an indicator that liquidity is declining. Last Friday, the spreads declined, which is a good thing. That means more liquidity from around the 18 area down to the 16 area. But prior to 2 months ago, when we had that yen fueled over VIX drop, prior to then, we were looking at spreads in like between like 8 and 16. Most of the time, it was between like 8 and 13. So because the spreads have widened, we've gotten a lot more volatility, and the downside kind of trap door has opened from a liquidity standpoint and from a Vanna standpoint. So I am, I'm not thinking, this could extend a little bit. I mean, I'm just saying the trap door is open. The market has to take that option, the choice to step into the trap door and fall. But if it does do that, if it decides that, we can see very strong overvixing because nobody has puts. Everybody is selling calls as their hedge. A lot of put buying, and you kind of have to, until that put buying shows up hard, then we can continue to drop. Dealers will continue to hedge down, and that's because of aggregate Vanna being very close to zero. All right. So my unprepared show riff today is over. Let me go check out the comments. All right. Can you talk about negative gamma and what this means equals acceleration? Okay. Hold on. I'm going to have to drink some tea for this one. All right. It has been said that high amounts of gamma, positive or, crossing over into negative, are, let's say high positive gamma is a muting kind of softening of market volatility, right? That's kind of the paradigm or whatever. That's the outlook that people have. And mostly it's from like a JEX kind of thing. But overall, that is an observed behavior. Mathematically, it doesn't make any sense. If gamma is the measure of how it's like an accelerant of delta, higher amounts of gamma would be a higher accelerant of delta, which would mean that volatility should be going up for high amounts of gamma. Conversely, if gamma is zero, like, people say, oh, we're at gamma, we're at JEX neutral or something like that. If gamma were at zero, then deltas would be moving normally if the market was moving, right? Deltas wouldn't be accelerating at all. So, but there is an observed behavior where if gamma is zero or, strongly negative, that delta moves very strongly. And it is that observed behavior that just assumes, oh, well, I guess gamma is causing a muting of volatility when it's high and positive. The reason why is because it's not caused by gamma at all. If you read our white paper and we, calculated out how much dealer hedging is caused by gamma, we isolated all the Greeks: gamma, vega, Vanna, delta, etc. And read the white paper on www.vol.land. You go to the resources page. I think that big, huge graphic on the top is the white paper. So go to the white paper, read about what the dealer hedging is based on, what daily moves have been compared to the Greek that we are trying to correlate to. And we do a, econometric regression. And that's not something that you'll see many places, particularly in like the JEX world, because they don't have a correlation. Their correlation violates heteroscedasticity, which means that it spreads. It's like looks kind of like a triangle on their scatter plot. So, I mean, there's something to be gained in that spot as you get closer to negative gamma. Again, it's an observed behavior. Volatility goes up. What is actually causing that? Well, from our research, vega is causing that. It's volatility. Um, Option dealers do not hedge Vega very much, right? They hedge it, but only when it gets too extreme. And the reason why is because typically they are short Vega, so they want to, or they're long theta, and they want to gain as much money as possible. Like that's, they're trying to gain profits based off of time decay. So they're not hedging the premiums of the options very much. As a result, when Vanna is, apparent, it's very large, something like that, then dealers are seeing it on their deltas. That as Vega decays, as time decays, they're seeing it on their Vegas, right? They are normally positive theta, so they're trying to collect that theta. And as those deltas decay, or as that, implied volatility decays, those deltas start showing up on their screen and they hedge them. And it typically ends up as a releasing of a negative hedge. So it keeps, kind of climbing up little by little. That is not because of positive gamma, though. It is because of implied volatility changes. So to now, in my long-winded way, hopefully I answered your question, which is, can you talk about negative gamma and what this means as far as acceleration? Vega and Vanna has more of an impact on acceleration. On 0 DTE, there is a gamma component where, dealers' positive theta is run out. It's gone too far. The position that they're holding has gone too far, either up or down. I mean, it's not like a standard calls sold, puts bought all the time. It has been for a little bit, but when they're not collecting theta anymore, when their premiums are not, when they realize that they're underpricing the market move, then they will hedge gamma. You would notice when that happens, when you see like a little drop, it's kind of like a stair step drop, and then 15 points in like 3 minutes, right? 15 points down in 3 minutes. And then after that 15-point drop, it stops. So it's like a drop, and then it's like we just hit the floor of the pool, and we hang out in that same area just for a little while. That is a gamma hedge. And as we stay on that floor, that kind of like that bottom spot of that after that 15-point drop, that gamma ends up having to be unhedged at some point. And you get these massive rallies at the end of the day, like the last 10 minutes of the day. Next thing you know, we were minus 60, and then you close your computer very happy about your sold call, and then you come back and you're like, how did we only get minus 30? And you see these big candles going all the way up in the last 15 minutes because that gamma has to get unhedged as well, right? So when you see those big Vs, I mean, we see it on Volland all the time. I mean, I would highly recommend if that's the kind of like time frame that you're trading, you want to see that, because a lot of times you'll see those bounces, those Vs. They kind of look like Nike swooshes, right? It's like, oh my goodness, we're all the way down, but whoop, at the last second, in the last part of the day, we just recovered 30, 40 points, 65% of the drop, right? You want to see that. So that's really when you want to pay attention to gamma, is on the 0 DTE time frame. But on the higher tenor time frame, it's a typical, like 90% it's Vanna, right? So Joey's asking, is Vanna negative? Not yet. It is very neutral. I think it's like just 2 billion. It hasn't been this low since 2023. So right now, what you'll see is, because of this area right here, I'm going to zoom in after this updates. So remember that one of the principles of Vanna is that if, positive Vanna is a long option above price. It could be a put, it could be a call, it doesn't matter. But it's a long option above price. But that same long option, once price crosses it and it's below price, a long option is negative Vanna. The reason why is because if you have a long call and it's out of the money, I'm just going to kind of conceptualize this a little bit. If you have a long call out of the money, say the delta is at 20, That 20 delta, as time goes on and as volatility declines, that delta is going to go down. It's going to, because upon exercise, it's worthless. It'll go down from 20 to 15 to 10 to 5, whatever, right? But that same call, if it's at 80 delta, which means that it is in the money by about the same distance, from the distribution side, it is about the same distance. So let's say it's an 80 delta call. When that 80 delta call expires, its delta is 100, right? Does that make sense? So as the time goes on, since it's in the money, there's actually going to be money that's going to be transferred, right? On a cash settled option. If it's a equity settled option, American option, then it's going to be an equity that's transferred. But that delta goes up, right, as time decays. It goes from 80 to 85 to 95, right? So that same call, depending on where price is, will have a different flipping effect. So when you hear about, pinning of a large Vanna strike, that's there because Vanna is flipping sign and implied volatility is not changing direction. It's going in the same direction. But when that sign flips to negative, then the price is going to come back. And then it's a positive. It's going to come back. So it's going to kind of be like a planet around a star, right? It's going to go back and forth until that option is zero. It can be shaken, of course, like if there's a big fundamental event, it can be shaken away from its star, but that's what the pinning effect is. That has nothing to do with gamma, right? Gamma is the highest at that point. So that means delta should be swinging it farther, right? If gamma is higher, that means delta is accelerating and decelerating faster, right? That's math, right? I'm sorry. I mean, the observed behavior is not conforming to math, but math is objective truth. It has to happen. So that's kind of, that pinning kind of thing. So aggregate gamma, now that I've kind of had that diatribe on it, aggregate Vanna right now is only at 1.7 billion. I know I saw it on the tooltip before. I guess I can zoom in further. It's only at 1.7 billion. It hasn't been this low since 2023, right, or early 2023. And so that means that as implied volatility declines, there's not going to be that much push to the upside. Okay. Anybody who's buying right now is not an option dealer. Like their option dealer is not going to be the primary buying force. So that leaves the door open on the downside. I mean, over here, option dealers are pretty much, they're putting out billions of notional all the time in a positive direction. So a lot of like these major bull markets that blow off top, or, people say, how did the market get this high? Well, a lot of times that's because people are hedging the downside and dealers are incrementally releasing their negative hedges and causing the market to go up. It's kind of leverage, institutions are leveraging, and it turns out to be a positive force in a slow manner, thanks to the option market maker unhedging, I guess it would be. So right here, we have 5.5 billion in Vanna right here at 5,800. This, as price crosses, this will flip down to negative. Even as you get close to that price, that Vanna is going to shrink, because at the money is Vanna is zero. That Vanna is going to shrink. It's not going to take much upside here for Vanna to go negative. So is it negative right now? No. Will it be? I mean, if the market goes up anymore, we will flip to a negative Vanna regime. And there's not much support underneath to stop any kind of sell-off. If somebody some person outside the dealer space believes that the market is stretched, I'm going to sell, it's going to sell and sell hard. Okay. All right. So the next question. Is Vanna trend just something for indices? No. This is something that works with all stocks. However, another kind of funny thing with stocks is that there's a lot of speculative plays in individual stocks. There are a lot of dispersion plays, particularly with Mag 7. That top 7 stocks, I guess, Microsoft, Nvidia, etc. They kind of have a similar look to indices, but many stocks have a lot of speculative plays, like 10,000 calls on, NVIDIA, something like that prior to earnings. And there's a lot of, it doesn't follow the standard bought, put, sold, call kind of regime, which is, great for Volland subs because we see when it is, oh, a lot of people are selling calls. Oh, a lot of people are selling puts. A lot of people are buying calls. So when you see that, Vanna trend can tend to go negative or positive. But what really happens is usually you see a big spike in the Vanna exposure chart. And when you see that big spike, that is going to be a major magnet and it stays there until expiration. Again, I didn't prepare to show particular stocks, but let's take a look at some. Somebody have a ticker that they want to check out. Let me I'll go over here. Don't all answer at once. Let's see. Anybody got a ticker they want to check out? And then we can kind of look at what we got. All right. Absent that, I am going to go to, I'll go to like, I'm trying to think of one that may have a Vanna spike. I don't want to like, if I go to something like Microsoft, it's just going to show you the same thing. All right. I am going to go to NIO, the Chinese electric car maker, right? So this is probably not going to be a great example, though. Because, all right. Well, so, all right. Theoretically, this is a good example, but I want you to understand that this is a an ADR, right? This is an overseas stock. So take it for what it's worth. There's going to be some overseas kind of activity going on. Okay. But somebody, I think like over here, I noticed this on the option traffic. Somebody bought or somebody sold a ton of calls here at $10, right? You see it right here in the big, huge call spike. It's like 7 million in notional in calls. Okay. Again, this is an example, not investment advice. I'm not saying buy NIO or sell NIO or whatever. Somebody with a lot of shares in NIO decided, I'm going to sell. Right? I'm going to sell these calls. I'm going to collect the premium. NIO tends to have a lot of premium because it's very volatile. So somebody's trying to sell these calls. So here we have this big, huge spike here. As that implied volatility comes down on that spike, and I don't know what expiration it is, I kind of forget, but as implied volatility comes down on that strike, dealers are going to be re-hedging, and they're going to end up buying. And this $10 strike could be a magnet for Vanna. Again, fundamental differences can change that. This is not investment advice. I'm not saying buy NIO. But there's a good chance that absent any fundamental change or absent anything different, right? We can kind of progress, the price of this may go from 684 and progress slightly up toward that $10 area. And you can also see that the trend here has sharply, increased very strongly, probably because of this call sale. So yeah, I mean, this is probably a really good example of showing how to read it on an individual equity basis, right? It gives you a target, it gives you a direction, and it's interesting. It's a compelling trade, right? We have about 240 equities on here. If I change the ticker to something a lot more popular, something like NVIDIA, there we go. You see, there's going to be a lot more strikes. You can see also that it's kind of flat as far as aggregate Vanna trend goes. But if we were to advance up here to 130, it will decline fast. It'll start saying, okay, we are going to, aggregate Vanna is going to decline. It is going to, this is going to flip down negative. So you could probably look at something just above 120 or 130. I'm sorry, just above 130 to advance. And then it'll kind of come back and maybe, again, orbit that 130 quite a bit. But it could go up to as high as like 135 before that aggregate Vanna trend kind of declines sharp enough to make that a magnet. When aggregate Vanna is really high, that's when it is less likely to stay as a magnet. Okay. But as SPX has shown, aggregate Vanna is very, very low right now. So if we advance in SPX, it'll go up to 5,800 and probably magnet there. It'll probably stay there until somebody decides to sell. When that aggregate Vanna is very low and somebody decides to sell, it sells hard. So, yeah, absent any questions. Oh, Tesla. Everybody wants Tesla. JPM, Tesla. And Joey Chen says, I just want to know when the market will drop tomorrow. No, I'm okay. Not investment advice. I was just kidding. I'm just kidding. When will it drop? It will probably drop. There are a lot of catalysts that can really just launch it. I would definitely exercise good risk management. Definitely exercise good risk management on the upside because honestly, in the upside, I think we're very capped here in this area. But anyway, let me change the ticker to Tesla. Tesla's always been kind of interesting because they have a lot of round trips intraday. But the option volume has settled down quite a bit to the point where like NVIDIA has now more option volume than Tesla. But that being said, so it seems like somebody sold a ton of calls at 300 right here. That has increased this Vanna trend quite a bit. So Tesla is looking somewhat positive. This 300 strike could be a pretty close magnet. You see, like when you do equities like this, you can see these very apparent strikes that you will attract to. And this works really well with earnings. I think when earnings time starts coming around, we'll have some, we'll do some earnings kind of plays and analysis. But these big strikes, no matter what the earnings come back as, fundamentally, if it's within, a certain range, it's, it's not like the company is folding or something like that. These strikes tend to attract price. Very, it's very profound and compelling trade on earnings days. So Tesla, we're looking at an increase of aggregate Vanna thanks to a large sold call on a swing basis. 2, 3, maybe 4 weeks. You might see Tesla get up to 300. So I saw JPM was up there too, right? Somebody asked for JPM. I'll change the ticker to JPM real quick. I am going way long, but hey, why not, right? I'm alone, so I'm not taking up anybody's time except my own, right? Okay, so this is interesting. JPM, while the other ones, Tesla, NEO, NVIDIA, they didn't have any put support underneath. So if a fundamental event happened and the market, sold off on NVIDIA, Tesla, there's some kind of fundamental thing that caused customers to sell. If that happened, then those stocks would decline very hard, right? Because there's no support underneath, right? They need puts to be bought. JPM looks like people are buying some puts on JPM, right? Not a lot. And JPM, it's not huge, but these puts are going to provide support. So upon a market sell-off, if something happens, JPM will probably sell off a lot less than SPX, NVIDIA, all the, other kind of tech companies that have a similar, lots of sold calls, but no bought puts, customer activity. Here, JPM, people are buying puts. So that provides support. So if there is a market sell-off of some sort, I think JPM will probably hold up pretty well. So if you wanted to do like a pair trade, I'm expecting SPX to sell off or something like that. But if it doesn't, kind of incrementally goes up, you might want to buy JPM and sell SPX. And it would be that kind of pair trade would help you kind of weather any storm or weather any really non-storm, because you'd be trading a storm for declining market move. But JPM would be there to kind of save you a little bit. It would be there to, if the market decides to not do anything or go incrementally up a little bit, JPM would be going up with the market. But when the market tanks, it would not be going down to that extent. So that's kind of a cool thing for this stock. JPM would be very interesting to have as almost like a market hedge if you're going declining market. Absent all that, though, it is a very strong, high aggregate Vanna. A lot of times when you see these huge drop-offs to negatives, that's because it's starting to hit that magnet. And you kind of have to know we're hitting that magnet. The magnet right now would be about 225. So if the market incrementally increases, 225 would be the magnet for JPM. All right. All right. So we already talked about NVIDIA, Joey. It was kind of similar to SPX. It had a 300 magnet strike, but if the market decided that it's time to sell, NVIDIA would not be stopping it, right? All right. Thank you very much, everybody. This is a 40-minute single man riff right now. And yeah, so take care, everybody, and look forward to seeing you next week. All right. Bye-bye.